Well, OpenAI has closed a massive funding round that values Sam Altman's generative AI giant at $157 billion. For more on this, let's welcome in Yahoo Finance's Dan Howley. Dan, there's been a lot of reporting recently that this was in the works. So now it is closed amidst a time of some turmoil for the company as well. So give us the big picture here.
Yeah, they raised $6.6 billion. Some of the investments come from the likes of Microsoft, a little bit of investment from NVIDIA, which is interesting, and then a number of VC firms. But as you kind of pointed to, this is a time where OpenAI is dealing with a number of high-level departures. Their CTO just left. Some of their scientists have left. Co-founders have left. So this is a time where you're looking at this company and you're saying, okay, so it's basically Sam Altman's company. Microsoft has obviously a kind of, you would think, guiding hand to a degree, just based on the huge sums that they've invested in it. I think part of the equation comes down to, how does Microsoft feel about the changes going on there? But I guess that's besides the point when it comes to this round, because clearly they still have plenty of people who believe that they have room to grow and will continue to be a driving force in generative AI. That's despite the fact that the likes of Google, Amazon, Apple, kind of to a degree, Meta, are really building up their own AI offerings and proving that they have what it takes to compete in the space as well.
So it was interesting, Dan. I saw reports that they're actually on track to lose around $5 billion this year on something like $3.7 billion of revenue. But I guess these investors are just saying, that's okay. Spend, grow, take as much share as possible. We'll worry about the bottom line sometime later.
I mean, that was the kind of go-to idea for Silicon Valley for a while, right? Mostly prior to the pandemic. That was the kind of go-to model, was just expand, burn our money like it's nothing, and then you'll get us on the back end, basically. And for a company like this, expenses are kind of different from what we saw from the Facebooks or Metas, whatever. It's Facebook then, so let's just call it that. Because they have to invest so heavily in the hardware, the land, to have data centers. I mean, it's not just building software and paying people. It's huge sums of money going into the actual infrastructure to operate the business itself. So they're going to continue to burn holes in the pockets of their investors until they're able to start turning a profit based on either deals or signing up more enterprise customers or getting consumers to sign up for the pro level. And there are obviously subscribers that do use the pro level. They still have millions of users who use the free version, but it's going to be the enterprise and those deals that they sign, something similar to what they have with Microsoft, Apple, for instance, they're working with. That's going to be what starts to really generate the funds. I think the other thing is, as I said, Google's trying to do that too. And they're not a small company. I mean, relative to OpenAI, they make OpenAI look very small. So, it'll be interesting to see how those two kind of do battle and where that leads OpenAI.
Yeah, I mean, just to, what I thought of as you were talking, like if you think of something that's a subscription model, I know it's not the same at all, but I think of Peloton, right? Where you pay a certain amount a month, whether you have the hardware or not, and that's not enough to sustain the kind of investment. So to your point, they need even to ratchet up, they need the enterprise customers because it's not paying for itself.
Those are going to be the ones that do it.
Yeah.
I mean, bad, poor Peloton.
Well, that's a whole other story.
Yeah.
Dan, thanks a lot. Appreciate it.